Theo Trade. This is Don Kaufman. June 22nd, 2020. Minutes to go to the cash close. The S&P futures up some 42 handles. But hold on, time out for a second. One of the things that you have to be aware about today's marketplace moving up, and I think that this is incredibly important because if you have tuned into the marketplace today, maybe a little bit confused by this. So the S&P futures are up 1.3%. But if you look at any of the other major index products, like for example, the SPX or for example, the spiders, okay, they're only going to be up about 0.5%. And that is simply because the S&P futures and the NASDAQ futures, for that matter, moved quite considerably after the cash close on Friday. In fact, I was recording the weekend video when that was going on. I mean, the S&P futures dove some 30 handles just after the cash close. So what we have here is a little bit of a fair value differentiation. You're like, okay, so what does that really mean for you? I mean, for the most part, what it really means, the marketplace is up, but minimally so. I mean, I would actually love to scream this out. The marketplace is massively unchanged, with the NASDAQ grinding a little bit to the upside. Obviously, the financials are a bit weak. But inside of this massively unchanged market today, I wanted to take the time to describe to you a couple of trades that I have been doing as of late, and that has everything to do with backspreads, ratio backspreads. So I'm actually going to detail a couple of ratio backspreads on this evening's video, given the fact that the marketplace is massively unchanged. So let's kick it off. Let's actually kick it off. If I'm going to cruise over here to the trade tab, and I'm actually going to type in this case, IWM. Okay, because what I want to display to you here is with ratio backspreads, you can get bullish, you can get bearish, okay, but you want to allow skew to define, okay, the implications for the trade, and that is the directional bias. So one of the things that I am not going to do, I'm not going to come over to a chart and go, what do you think about the IWM? Listen, we can pull up the auto expected move, and we can actually, discern, all right, so last week we were down here, then we rallied up here, maybe we're going to go higher or lower. Push all that aside for a second. It's not going to make a difference because the backspread needs to be defined by what the implied volatility skew looks like. And for those of you that are unfamiliar with a backspread, okay, what you do, okay, categorically speaking in a backspread, I'm going to go ahead and open up a few more strikes in here. What you do categorically speaking with a backspread is you sell, okay, very close to the money, and you're buying further out of the money. Okay, and what I'm doing in this case is I'm going out there, and I'll give you an example here. If I were to sell one of these and then turn around, okay, and maybe buy, for example, okay, two of these, that could be a backspread for a very, very mild credit. But one of the things that I'm trying to point out here and why I'm using the IWM, got 25 days to go to expiration, is I am selling, in this case, approximately a 40% implied volatility. And then I am buying down here, okay, 2 times a 36 fall. That is actually placing the volatility skew in my favor. Now, I started on the IWM. Again, we could pull up trades, roughly speaking, on any product that you'd be familiar with, but I started on the IWM because the IWM has a very, normal kind of skew. And again, I'm just kind of ballparking a few trades as I click over here. There's 1, 2 of those. So here is, again, kind of that quintessential backspread. I'm selling 1, buying 2. It's done for about a 5-cent credit, right? So freeze everything here, right? We're going to take the trade. We're going to right click. We're going to go over. We're going to analyze the position. Okay, in analyzing this position, there is what we often term this valley of death. And there's quite a bit of margin held up in this trade, but one of the things, of course, that we teach in the backspread here at Theo Trade is how to largely mitigate a huge amount of this risk. Okay, so you can mitigate a huge amount of that risk. Nevertheless, worst case scenario, you need us here. What's here? About 155. Okay, so one of the things that you'll learn about a backspread is it needs an absolutely phenomenally large move, and that's exactly what we've seen as of late. I mean, getting all the way up to 155, that's when the chart starts to come into play. I mean, you ask yourself, so now let's actually pull up a chart and let's say, hey, in the next 25 days, can we get up to the 155 level? I look at it, absolutely. Sure, why not? Okay, would it be breaching into new highs? Yeah, but you know what? The marketplace has been charging forward. Why not? I think we can get all the way to 160 easily, right? That wouldn't even crack into all-time high territory. So it's pretty easy to say like, okay, that's kind of an outlier type move. Nevertheless, okay, par for the course of what we've seen lately. So again, this in the IWM is a very normal skew. And I also want to display this over in the spiders. Okay, if we cruise over to the spiders, I'll use the same 25-day expiration, neither here nor there. And I want you to see, again, a very normal skew that the at-the-money calls, because the at-the-money calls are trading for more than the out-of-the-money calls, okay, then I'm actually going to deploy this particular back ratio spread in a bullish scenario where I'll sell here, for instance, and buy here. So selling here, buying here, selling one, buying two. All right, I think everybody's kind of got it. Now, let's actually go into some real trades. All right, one of the trades that I've actually just recently put on. You're going to love this one because there's a reason I just explained what is a normal skew. Because now, let us look to Roku. Why Roku? Because everything in Roku right now is rather abnormal, if you will. And I'm actually going to snap to another account where I have a number of trades on. What is interesting, okay, about Roku is that the volatility skew in Roku, and if you take a quick look at the chart, because everybody wants to look at the chart, right? The volatility skew in Roku has gone ahead and flipped over, probably because of the fierce, move to the upside, and people are buying call options like they're going out of style. So I'm going to look at this as a little bit of a contrary indication. And what I'm getting at over here, when I say the volatility skew is inverted, all right, take a look at the calls. Just a moment ago, I'm showing you the calls. All right, these are like 73, 74%. But then the out of the money calls, they're even more. So if you sold this and bought this, the skew is horrifically against you, right? I mean, you're like, yeah, but nothing. The skew is horrifically against you. Allow the skew to define you. Right? And if you take a look at the puts, and that's exactly why you can see I've actually traded the puts, it's not necessarily because I'm bearish in Roku. I don't know anything about Roku, other than the stock has actually run up considerably lately. Okay? And I've got a couple of things that say Roku box around my house, but that's it, people. So I've put on this position totally dependent upon, for instance, skew. And I'll just give you an example. This is one of the positions I put on. I put on a 130, 115 put spread. Again, a 130, 115 put spread for about a $2.65 credit. So I need not even look at the analysis of this. Okay, is there risk in here? Absolutely, unequivocally, yes. You have a $15 wide spread that's embedded in here, but you're getting a 260, 265 kind of credit for it. But stop right there. What if I am wrong? Okay, this trade that I'm doing in Roku, and I don't mind saying this because I just showed you a bullish one over in IWM. I showed you a bullish one of the spiders, but this trade in Roku would be just wicked bearish. Wicked bearish. I mean, if Roku really tanked all the way down, for instance, to like the 90 level, okay, this thing would be just huge. I mean, it would absolutely knock it out of the ballpark. And you go, well, could it get down to 90? Well, it just came back up from like the 80 level, albeit recently, even down to the 60 level. That's just a hop, skip, and a jump away, but I'm only giving it 25 days, okay? But what happens if I'm dead wrong? I'll tell you what happens if I'm dead wrong. If I'm dead wrong and the stock continues to rally, I'll get to keep the $2.65 credit. Not half bad. And what happens if we end up in the valley of death? Oh no, the valley of death. The valley of death is when you end up between 130 and 115. Don't you worry. We are going to take some heat, but we're going to be able to mitigate a degree of that risk. So Roku is obviously one of the trades that I've gone on. You can see a multitude of different positions in here as the stock was rallying up. And last but not least, another one I'm watching here, Apple. And I'll tell you why I'm watching Apple. Apple obviously has a developer conference going on. Its next earnings periods is not until late July, so no harm, no foul there. We could probably even go out to July 24th on here. But one of the things that I've noticed inside of Apple, and I'm actually going to show you the monthly options that have 25 days, Apple's skew has completely flattened out. Okay, this is actually kind of a contrary indication, but the way to read into this, if you take a look at the skew, it's very, very flat right now. The way to read into this, nobody has a clue inside of Apple, but they're actually projecting that the risk is similar to the upside as the downside. Again, very, very mild skew, almost completely level in terms of skew. This is actually one to keep an eye on in the next couple of days for a variance of ratio backspreads. I can build all kinds of cool trades in here because of that flat skew. You know, this session is the S&P's just closed up some 47. Again, net the marketplace finished up rather mild. Again, huge moves occurred in the overnight marketplace. I mean, net you're looking at 80 plus point moves inside of the S&Ps. But hey, the marketplace is still largely unchanged, bonds unchanged. It's a perfect time to put on a couple of those ratio back spreads. Thanks everybody for joining us here at Theo Trade. Have a wonderful evening. Bye bye.